Yo, yo. All right. Day before CPI, Monday, really no news day. It's just like the odds are against you for good price action. So I just feel like it's kind of pointless to just try and catch a move. There's a greater chance of you losing money, blowing up an account or something than there is of you catching, a nice move and good trend day, kind of something that's easier to trade. If anything, if you got out of it, anywhere near flat or even in the green, you either, maybe snipe some entries or just had high cortisol all day, just trying to continuously like get your money back kind of. So why bother? But I'm going to show you something because I almost got in a trade today. It was close, but this, what I call lunchbox delivery method, saved me. Always mark it out. So it's this blue zone here. It is 10 minutes before lunch and 10 minutes into lunch. So it's about a 20-minute range. I always mark it out when there has not been a trend or a move that is formed. So, you would see like a move in reverse maybe after 8 a.m. or a trend that would start, or sorry, 10 a.m. I guess for New York traders. But yeah, so in this case, nothing really has happened. It was a lot of chop to start off, at least on NQ. And then we get into lunch hour and I mark out that zone, and I'm only looking to trade with the trend, especially if we're above midnight open. So I would only be looking for buys. So I was only interested in buying down here, which I didn't, there's until if you waited till the end of the day and after hours, good for you. But I actually was just hoping for a break above this range, retest, and take off and start going to some of these standard deviation points that I marked out. If you watched the video last week, you know that I was looking for continued buys. I was looking for 7,400 to hold. I said the deepest I'd want it to go is 7,390, and almost to the tick. So yeah, if you're able to catch that, great for you. I wasn't, again, Mother's Day. I'm not trading that or day before CPI, but yeah, you would have had to deal with some horrendous chop before you actually got in there. We hit this target that I was looking for. I wanted to hit on the top of this TR pocket, this 2 standard deviation from this manipulation right here. And once it hit, I'm no longer actually looking for these to be reactive levels, just because we have a new key open SMT there. After 10 a.m., for me, it'll show 8 a.m. because I'm 2 hours back, but 10 a.m. open, so new 4-hour candle starts. So that's a new key open, and yeah, we're also into New York open, so very important. And we see lower low there, higher low on ES. So mark that out as the manipulation range for our standard deviation, and that is actually a very big range. That's a huge range. So you don't really just want to take longs above here. You could have gotten a little bit of profit, I guess, but risky business when this is not, when you see a kind of overlapping range. ICT traders will call it a balanced price range. When there's just like a lot of action, low volume that could be corrected there. So I mark out this. I wake up a little bit later in the session because I don't plan on taking any trades. I mark out this range, and yeah, I'm looking for essentially this range to break. I don't want to be involved in this range, in this lunchbox range, I call it. I'd rather just be involved in a break away from it. So I'd have to see a very convincing reversal to take any shorts. I don't want to be short until I see sellers really take control, which I haven't yet. Ideally I was just looking for this to chop around, maybe this to be a manipulation. Then I got really excited here, thinking that it actually might break free and we might actually have a move happen on a Monday before CPI, but it didn't even crack those highs, and instead just chopped and then moved lower, and again made people think that sellers had control. There's a lot of sellers piling into these lows, but it's just getting scooped up. Look at this sloppy bid, but it's holding. And again, when the bid is sloppy around a zone like that, to me that is institutional level buying, and that they have deep pockets, they can handle these wicks and stuff. They're not getting wicked out of their positions, so they're just scooping everything up in this range. I would like to see, for now, a continued move up to target these levels. I would like to see 330 hold. If 330 doesn't hold, I'm just a bystander. I also want to see Conversely, I want to see a 74.20 hold. So we could see something like this. We could actually come into this golden pocket area, see 74.20 holds, and move up from there. With this big wick, a lot of people will just they'll want to be long immediately. But there's, sometimes these wicks, they act as imbalances. There's low volume nodes in there that sometimes need to get corrected, sometimes skipped auctions. But yeah, here I would like to see maybe not take this low and hold 330s and move up from there and start attacking the upper part of this range. Again, don't know when this will happen. I would like for it to happen fairly quickly into Asia for it to be valid. I don't really want to see just like a bunch of chopping around here, kind of like that is no-go. Basically, I want to see this happen fairly quickly and then start moving up in anticipation for CPI, and then have CPI maybe, print something that initially might be looked as bullish, like it'll, everyone's expecting a bad print, but maybe it's not as bad as everyone expects, and then we see kind of pump up and just down from there. So that would be interesting to see. I guess we'll see how price plays out overnight. Unless I see some aggressive moves happen right away, I don't really want to be involved until New York session, until after CPI. We will see. So yeah, that's what I'm looking for to hold. Looking at so CPI in the morning, and then we have PPI the next day. So it should be an interesting week. Yeah, if the idea that we might if we get up to there, we might start to see an actual big sell day, is just based off of CPI from 2 years ago, July 11th, that I remember very vividly. I was on the wrong side of it. Like I said in the last video, I think, I was basically long at open because I had seen it was basically a cooling CPI print. So at that point in time too, everyone was worried about interest rates and what the Fed was going to do. And so they saw a cooling CPI print, and everyone was like, oh my God, here we go. The Fed's going to cut sooner than expected. And just buy seemed like the safe play that day. It's just like, why would you sell on a cooling CPI print? And there had been a continuous bid where, again, just continuous highs and higher highs. And so it just seemed so straightforward. And then, it was just like a short manipulation up and then immediate 2% down day. And it just kept selling off like crazy. And there really wasn't any explanation for it. No one really knew why. The news just, they just talked about it as sector rotation. Tech had been on a huge run, similarly to now. This is why I'm drawing the similarities in between then and now. Tech had just been on a huge run. Semiconductors had been pumping a lot, and Tesla too. I remember, like I talked about in the last video, when I was talking about this CPI day, there was news releases around it talking about how bullish Tesla had been, and Tesla had been on an 11-day win streak. And if you look at Tesla now, it's the same thing. It's pumping continuously. It's been on a huge rampage. So very very similar, very reminiscent of that CPI day, where all those same things are lining up, and it was 2 years ago. So I'm curious if history repeats itself and catches everyone off guard when they think that there's a better than expected CPI print and they feel like longs are a safe play, and then we just end up completely selling. And then from there, I would expect people to get chopped from there. If that's what happened, let's say we move up overnight and then, move up overnight and then we actually manipulate and then sell down. I would look for something like that. I would look for a close below here. Ideally below the weekly open. And then I would look for, probably what would happen is we would now, after taking these lows, we would see some aggressive chop kind of, and then we would either retest and go down, or, chop and retest a little higher maybe and then go down. I don't know, something like that. So that is what I would look for. After that, I don't expect us, I've said this previously, I do not expect us to just, kind of go up and then rip down and have that be the top. That would just be too obvious. Usually when the market makes a top, no one knows it until weeks later when it starts really selling off, when you start seeing some gap downs and people go, oh crap, maybe that was the top. it's not going to be obvious. So I'll just look for a change in the tape. I'll look for sellers to really have control. Today, there was way more sellers than buyers on ES, but price finished above true open. It finished above this initiation at 74.20. So that's what I care about. Yeah, again, that on ES, that's what I'll look for there to be, if we're sticking around this range and we manipulate higher and then come down, for me to get the feeling that sellers are in control, they'll have to close it somewhere below, I would say, below 73.90. Below 7,400, I'll get interested. Below 73.90, I'll be like, all right, I think that's it. But yeah, for now, they are holding. Institutions are still buying. You have, earnings kind of like whatever until Friday. Friday is NVIDIA, I believe. Yeah. I believe Friday's NVIDIA. Don't know why it's not right at the top there. But you do see actually some, I don't have bank stocks on here. Banking is starting to take a hit. And I mentioned it before. I think do I not still have it? Maybe that's going market. Oh no, I don't still have it. Dang. I'll just pull it up. Capital One. Let's just take a look. Capital One. Yeah. Banking. Look at this trend reversal on banking. Started with their earnings. Really like surprise to the downside. But what I believe was the major hit was the large change in expenditures, basically large change in covering of delinquencies. So a lot of basically what they call charge-offs or write-offs. I think they changed something in the regulations, so now they actually don't have to report a more conclusive or a more detailed version of that. But yeah, so I think it was just a large amount of charge-offs, which is just them being like, we're never getting this money back. This person is so delinquent. It's, maybe that person is declaring bankruptcy, or maybe, I don't know what happens in that case. I haven't been in that situation, but thankfully, people just essentially being like, screw you. Nah, I'm done. Sorry. Yeah, I'm not paying. I don't care what it does to my credit. I'm not paying this off. I'm just going to stop paying it entirely. So at that point, after a certain amount of delinquency, these lenders, they need to just write it off as a expense, just a charge off. Go, we're likely not getting this money back, so we got to just take it as a loss. So that is what I believe is starting to happen in banking, which is the tides turning slowly, which is the economy is now really starting to, unfortunately, feel the pressure of just high prices, high energy prices, inflation, all of the above. Commitment of traders report. We're at 14 minutes now. Okay. Commitment of traders report. We see a convergence between commercial, non-commercial, small speculators. So that is very interesting. Basically, they're net neutral. That to me is possibly another sign that they're just, everyone's wanting to stay flat at this point because no one really knows what's going to happen, but it doesn't feel good. And you actually see on the TIF report, which is just looking now at dealers, asset managers, leverage funds. So you actually see institutional asset managers, they're actually deeply net positive this is on NQ. I can pull up ES as well. But yeah, and then leverage funds and dealers are net negative. Dealers are probably just net negative for more of a pinning effect. If you know anything about gamma, there's a lot of positive gamma. So basically just dealers are, they're curbing volatility. They're selling highs, buying lows basically. So, but that's still, institutions are infinitely bidding this price up until, I don't know, until at some point something happens, news, I have no idea what, but eventually it's going to turn around. I can't remember if I don't think I said this already, but yeah, I will not accept this as a new bull market until we have broken out of this range. I've mentioned plenty of times in other videos, so I'm not going to dig into it. Until we've broken out of here, about 74.80, retested and continue higher, I won't be able to accept that this is actually a legitimate bull trend that has developed over just a squeeze. No one knows how far squeezes can go. They often end in capitulation events of one side. So sometimes those capitulation events can go quite higher than any marked out levels. So it's possible that, we might see, in that case, it would be like that, breakout and then fail back inside. So that'll be interesting as well. But yeah, I'm still kind of looking for something like that, or like I was saying, like that kind of something like that. We will see. And then, here's another sign that this is just it's not strong. Advanced decline. So think market breadth. So if you know anything about breadth, it's just the kind of the delta net amount of stocks making higher highs versus lower lows. And yeah, you see this divergence here is pretty obvious. Price is just continuing to push up from that consolidation above previous all-time highs. And you see just breadth is failing. McClellan as well, another market breadth indicator showing that there's just net selling among this higher high in price action. So this is either institutions knowing something that we don't that is about to happen that would turn this into like an absolute insane blow off. But yeah, there's just too many things pointing to the opposite. That just look at this as more of a squeeze that people are trying to time the top and they just keep getting squeezed further, but eventually this market's going to have to come back down to reality and make peace with future earnings, future guidance from AI, and the current state of the economy, the storm moves, all of it. There's so many factors, so many things. So I believe that's it. Basically, again, on NQ overnight, looking for 330 to hold to move higher, and then freaking who knows. I will be watching just with the rest of you to see what happens on the tape. But yeah, right now the tape is still showing buyers in control. I think that is it. Gone through everything. Yeah, commitment traders. Yes. Can I not just search there? Well, I'll pull it up on a different video. I don't want this to be any longer than 20 minutes. So yeah, big day tomorrow. See you tomorrow. Good luck.